Hi, I'm Larry Dixon, Senior Automotive Analyst at NADA Used Car Guide with this month's industry update. Last month, consumers brushed aside the amplified rhetoric surrounding the impending federal budget sequester and once again purchased more new cars and trucks than they did in the year prior. Rising 4% relative to last year, new vehicle sales improved for the 21st consecutive month in February, and with a figure of 15.3 million, the month was the fourth in a row in which the seasonally adjusted annual rate exceeded the 15 million unit threshold. As far as the used side of the market was concerned, as is typical for the period, wholesale prices for units up to 8 years in age rose in February, but the modest 0.8% improvement was well below the 3% increase observed for the month in the previous 2 years. In addition, February's tepid performance dropped NADA's seasonally adjusted used vehicle price index to 122.7, which is a decline of 1.4% from January's level and just 0.9% higher than February 2012's figure of 121.6. Relative to January, compact car and mid-size van prices improved by 1.8 and 1.7% respectively, or more than double the market average, while mid-size car prices rose by a slighter 1.1%. The acute 46-cent rise in gasoline prices observed since the start of the year was in all likelihood responsible for the above-average growth for these segments. However, segment price growth was again much lower than the 2.6 to 4.3% range recorded last year when gas prices rose by a similar 49 cents over the same period. As far as truck segments were concerned, prices were either essentially flat or just mildly improved, with large SUVs and mid-size utility growth averaging just 0.2%, while prices for large pickups and compact utilities rose by a slightly higher average of 0.7%. Luxury utility prices fell by 0.5%, which was just 0.1 point off of last year's fall, while luxury car prices fell by 1.1%, the most of any segment. Traditionally, used prices rise over the first 3 to 4 months of a given year, in large part because of the release in demand associated with the receipt of tax refunds. This year, however, NADA expects that price growth through the early spring will be notably weaker than what is typically seen for the period as consumers and businesses react to the expiration of the 2% payroll tax holiday and political activity surrounding the federal budget sequester and debt ceiling extension. The pull ahead of demand stimulated by Hurricane Sandy at the end of 2012 and the slight delay in filing income tax returns as a result of last year's American Taxpayer Relief Act will also play a role in muting price growth. Going forward, NADA expects that used vehicle prices in March will be flat to up slightly relative to February before declining as we head through April. For more detailed market insight and commentary, please visit NADA's website to download March's edition of Guidelines. Thank you.